Hello and welcome to the TradeSite U.S. Stocks and Futures Market Preview and Domestic Data Roadmap, Economic Data Roadmap for the week beginning technically Monday, this is September 1st, 2014, but really because of the U.S. holiday, we're closed Monday, so it'll be Tuesday the 2nd through Friday the 5th. A short week. We are done with summer. I do expect volume to start to pick up. We'll talk about that in a moment, and things will start to get back to being normal. We've had a couple of weeks where things were certainly as slow as they can get in the markets. They come back to being normal here very soon. So here's a look at the ES futures contract. Let's just look at the month of August. Talked about it coming into the month. It's typically a lighter month. Um, there are some gaps in the market. If I look at it from the NDX, I'll show you in a minute, that did not fill. It's just been a lack of sellers. Everybody was gone. The big professional traders were not trading. People that like to make money typically don't do much in August because they know better. And this last week in particular was very flat. So now that we've got that, we've left behind, I think, a lot of spaces for trading at lower prices, which means I have a feeling that hanging at this 2,000 level is probably not going to happen for much longer. September is historically the most negative month of the year in the stock markets. So it'll be interesting to see what happens to the markets here in the month of September. But we do start out with the Monday holiday, and volume should start to pick up. Here's a look at Nasdaq side. You can see how flat this last week was. Those 5 bars are basically just flat straight across. Got a little gap up Monday, as we'll see when we look at the intra-week action, and then just nothing. But you can see on this chart a little more clearly, because of the way the Nasdaq prints, the cash index prints, that you can see the gaps we left behind in August. So I would be looking for many of those to go back and fill, if not all of them. SOX index, SOX is back near the highs, and you can see there's a wall up there. That's the static trend line. I don't know if we even get to that. Depends how fast this rollover happens. Biotechs, nice cup and handle formation with a high range base now. Looks great, looks very bullish. Is it going to break out? I don't know. Remember, there's other factors here, which is time of year. All right, Google, daily chart of Google. They have some big announcements and presentations this week that could get the stock going a little bit, at least from an interest perspective. But right now, sitting between two key static trend lines, been pretty flat over the last month. Apple, hanging near highs, still using the risk line of the 13 sell signal. Had closed right at it 2 days in a row, kind of gapped over here on Friday. Let's talk about market volume really quick. This is the we show this all the time. This is the blue line is the 10-day moving average of Nasdaq volume, and as you can see, we've talked about this before. Prior to August, no closes below 1.4 billion shares. Means every day except for the half day before 4th of July, every day this year closed above 1.4 billion. We did have a couple days, one in April, a couple in May, one in June, one or two in July, that were close to 1.4, but most of the year has been significantly higher. If you go back to the first 4 months, it was almost all way up above 1.8 and 2 billion shares. That's good volume. That's what makes the markets move. It's the energy that drives the markets, right? So here we go. Coming into the summer, it has dipped, and then August just fell off a cliff, which is what usually happens. There's nothing unusual about that. That's why the smart traders don't do much in August, especially once you see that volume drop. The first week of August was actually fine. We had a great trading week in August, the first week of August. The second week, I remember we had 2 decent days and then that options expiration, and it was just really poor. But you could see that second week, most of the days, 4 out of the 5 days were right above the 1.4. And then options expiration, which gives you a little volume surge, up near 1.7. And then that was it. Came into the next week. Monday, Tuesday, just above 1.4. Wednesday, first close just under 1.4. Thursday and Friday fell off the grid there. Friday was that was a week ago. Friday closed just above 1.2 billion shares on the Nasdaq. Summer Fridays, and we had kind of an awkward calendar layout this year with Labor Day so early, September 1st, as early as it can be. So it kind of clearly marks the end of summer, which is the end of August and Labor Day. There wasn't a couple extra weeks in there like we sometimes have. Between expiration of options in August and Labor Day, which was just the 2 weeks. So then this last week, horrible. Monday starts out at 1.3. Tuesday barely got over it. Wednesday back to 1.3. Thursday and Friday 1.2. By the way, that's a big volume surge at the close on Friday. We were at 1 billion shares with 5 minutes left, so there was 200 million printed end of week type of style prints for the institutions heading into a long weekend. That should have been worse. So we brought the average now, the 10-day moving average of volume down to 1.3 billion, obviously the low of the year. And as I keep saying over and over again, it's normal that it gets down at this time of year. Here's last year. You can see it got down to about 1.3 billion for a day or two. It was a little better in general last year, not quite as bad volume wise as this year. But then look what happens the minute you come back from Labor Day. Typically, things start to tick up, and last year we got the average back to 1.8 within the month. So, with a lot of days up there pretty early on. So I would expect things to pick up. There's a lot going on globally. Obviously, there's bigger concerns now about oil if some of these areas of the world heat up a little bit more than they already are. So that could get commodities moving, it could get currencies moving, and certainly could get the stock market moving. And again, statistically, I would favor the downside, but we got to see that move begin before I worry about it too much. All right, let's take a look at 10-minute bars on the futures for this last week, so you can see the whole week and what happened. And basically, Monday we did have a gap up that did not fill. Little move higher and back and dead flat for this rest of the session. Tuesday, little gap up, didn't quite fill it initially, little push higher and then back. It's funny because look at Monday and Tuesday, they're the same day, right? You closed where you opened and you had a little push up about an hour in. That's it. Wednesday, flat opening, reached down to fill the gap from Tuesday, the prior day, and then look how flat those bars got until a little shake off in the afternoon, a little bounce back. Then Thursday, we gapped down. Now what that did is that filled the gap from Monday morning and then came back up and filled the gap to the tick at the close from that day. So isn't that technical action? Wow. Nothing going on in the markets, but we're reaching around and filling these gaps as we should. Friday gapped up, filled, wiggled around both ways. For the week, if you look at where the high and the low of the week are, the total range for the week from high to low on the ES is only about 15 points. That's average daily usually, and that's what it took for the whole week. So very narrow action. Nasdaq side, really no different. It looks even flatter on the Nasdaq, to be honest, if you look at it carefully. So that's typical of these expiration weeks. I'm sorry, end of August weeks, and let's shake it off and get back to work here now. We're going to take a look at the economic data that's due this week, and then I'll let you go. Enjoy your Labor Day weekend. On Monday, we are closed. Tuesday, ISM index and construction spending. ISM index can definitely move the market. Wednesday, MBA mortgage index, factory orders, the Fed beige book in the afternoon, auto and truck sales in the afternoon. Nothing too big there. Thursday is where the big stuff starts to hit. We've got the ADP employment change, challenger job cuts, the weekly initial and continuing jobless claims data, trade balance, that's a big one that can cause gaps, and then revised productivity, and then ISM services, natty gas, and crude oil inventories. A lot of stuff on Thursday, which is good. It'll be a good trading day. Remember, they're not going to just come back Tuesday and suddenly everybody's back trading heavy. So, we want to wind up a little bit. Thursday looks like a good target day for really having everybody back in the markets. And then Friday, the unemployment rate and the non-farm payrolls number, that's big. Of course, Fridays are always still going to be a little less than the rest of the week, but if we can get a slow build up Tuesday, a little better Wednesday, kind of feel like a normal trading day again, solid day Thursday, and then settle back a bit on Friday, that's a good start to the month. And then the following week should be better and better. That's what we're looking for. That's about it. Charts, as usual, brought to you by eSignal. Hope everybody has a great Labor Day weekend. We will be in the lab helping you make money when you return.